MicroStrategy still acting as a bit of a leveraged play on Bitcoin, a mantle that the Bitcoin miners used to make up. Marathon having a bit of a bounce today along with the other miners. They have had some issues with some dilution lately that have been coming out. Let's talk about that. Let's talk about its relation to MicroStrategy, and let's see what is going on with these two stocks right now. So this first page you see that I have here this is the MicroStrategy on Y charts. This is their shares outstanding. You can see that just since 2023, so this is just a 1 year chart. In 1 year, they've gone from 12 million to almost 17 million shares. Now that is significantly less shares than Marathon Digital, but they are still diluting at a rate of, what would that be in percentage wise? It'd be about, it's like 15%, 15, 20%, something like that. All right, let's do the math. Okay, 17. So we're looking at a 31% increase in their shares outstanding. That's actually pretty significant percent-wise. So people are, losing their minds over the dilution in Marathon Digital. Now, Marathon did like double their shares in a little over a year. But MicroStrategy is, falling victim to a similar thing. They are diluting you, and they're doing something else too that we're going to talk about here in a minute that leads to further types of dilution. But you can see here, yeah, 1 year we went from 167 to 267, so an increase by 100 million shares, a little less than half. So the dilution rate isn't like egregious in terms of the difference between Marathon and MicroStrategy, but Marathon gets significantly more punishment for it. The other thing that I find interesting, okay, so one, Marathon is diluting further. This was their SEC filing S3 on February 28th, so just a couple of days ago. They're going to issue another 1.5 billion shares of common stock. The current market cap is just under $6 billion, so they're going to be diluting us by about 25%. So our new target for our potential all-time high is now 25% less than it was before. And if it was the previous high, we're counting here at 75. What's, 75% of that? It's going to take 25% more money to get to that level, meaning maybe around 50 or 55 might be where we start thinking, maybe we're topping out on this thing. They are diluting a little bit faster than I would like, especially 25% going into the halving. That seems excessive at this moment, but whatever. I'm not going to worry about it. If we look at MicroStrategy and their current filings, this one was on March 4th. They're going to be issuing 600 million in senior notes. Now, senior notes, if you go to Investopedia, it's a type of bond that takes precedence over other debts in the event that the company goes bankrupt. So this is going to be a bond. Basically, they're issuing bonds, a different type of debt instrument for them. But these people are people that will own a piece of the company through a bond that if anything happens to MicroStrategy, they will get paid before you as a common stockholder. In fact, as a common stockholder, you get paid last if they go bankrupt. So keep that in mind. They're diluting, but in a different type of way. It's a different type of debt instrument that MicroStrategy is using, and they seem to be, mostly getting rewarded for that. Not yesterday, but we're still above the 5, so I'm not too worried about that. So the reason a lot of people are going to MicroStrategy and leaning into it as a leveraged Bitcoin play is because they hold so much Bitcoin on their balance sheet. Now, Marathon also holds quite a lot of Bitcoin on its balance sheet, not nearly as much, probably about 10% as MicroStrategy, but MicroStrategy doesn't play any role in the Bitcoin network other than holding coin. It's basically the same as the ETF in terms of it's holding Bitcoin. Yes, they have other aspects of their business. They do other things, but lately the correlation has been Bitcoin go up, MicroStrategy go up by, a factor of 3 or so, something like that. And that doesn't really make sense if you're looking at oh, well, they hold so much Bitcoin. Well, by that logic, Marathon should also be going up by some sort of a factor because they hold so much Bitcoin. And on top of that, they are an integral part of the Bitcoin network, keeping the whole thing alive. So honestly, it doesn't really make a lot of sense why MicroStrategy has taken center stage as this leveraged Bitcoin play because it holds Bitcoin. I mean, the ETFs also hold Bitcoin. They hold more Bitcoin than MicroStrategy. So I don't really understand that dynamic and why that's playing out with MicroStrategy specifically. And I am wondering if at some point that will come to an end, especially when these ETFs get much bigger. Um, than they currently are. I don't know. Let's have a discussion about that in the comments. Like, what do you think is the real reason behind MicroStrategy getting so much benefit from Bitcoin just on holding Bitcoin when other companies hold Bitcoin, but they don't get that same benefit? Or Marathon, yeah, they're an integral part of the network. Now they aren't making money. MicroStrategy might be a profitable company. In fact, let's look at it. What is their PE? 45. So they are a profitable company, and that's perhaps where the benefit of the doubt comes for them, where they get to be a leveraged play on Bitcoin. Because Mara currently, according to old accounting standards, they are unprofitable, but new accounting standards say that they are profitable and they have a PE of 17. So they're actually at a better value than MicroStrategy if we're going off of PE. They're almost in value territory. Now, now they are not a value stock. Do not think that I think that they are a value stock. That is not the case. But a PE of 17 versus a PE of 45 does look cheaper on paper. So I'm a little bit baffled why Mara specifically is getting punished for that in relation to they hold Bitcoin. They are also technically a profitable company. They are integral to the Bitcoin network. Why is it getting so much of a benefit while other companies, while distinctly different, have similar attributes and they are not? So that's a discussion I'd like to have today or think about today, ponder anyways. So in terms of price on Marathon, I'll stop with all that and get to the price. Price on Marathon today. We're at $23. We held just above this. We had that close, but it immediately went back, trying to fake us out of this double top. Now the market's going to try to get you to go front run this thing early. Now I wouldn't go buying puts just yet on this, and this is not financial advice nor a suggestion to buy, sell, or hold any stocks whatsoever. So what I'm looking at here now, yesterday, this was a bearish close. It was, but then we opened up back above the 50. This thing's doing a tightrope walk right now. This is a very tense moment on the Marathon digital chart. I'm sure it's also the same on Clean Spark. They're going to walk this tightrope and try to confuse us and make us nervous for a little while until they make a move. I don't know which way that move's going to be right now. This red arrow here indicates that we could be seeing further downside, but this could also pop right back up off of the 50-day moving average and go right back up to the 15, possibly even go right past it into the next thing. Who knows? I don't actually know. We are right at the pivot point for this double top. It has to either close below or above this. It has to stay above $22, right? It has to stay above 22.80 today, tomorrow, preferably the next day, for me to be convinced that this isn't going to follow through and go further. But it also has to close below this level in order for me to say that the double top happened. Much like over here, right? This was pretty clear back in January when we got that, well, yeah, January when we got that double top confirmation, right? The double top was at $20.37. We got a candle that cut right through it, and then the next one opened up below it, and we just kept going from there. This is much more indecisive. This here is meant to confuse you. This here is meant to give you stress while you wait for it to make a decision. This one is a lot less decisive. Now, if this candle today opened up down here below the candle from yesterday, I'd say it'd be more like the formation in the back. This is now something different, something that we have to keep a close eye on, something I can't be certain about until I see a daily close and follow through beneath this neckline. Basically, I'm going to call it a neckline here at this 2280. Either it comes in below and then the next day opens up below it again, or we close above it, and the next day we open up above this candle from today and start moving on up again. Now let's go to the weekly again and see where we are. So the weekly, we can come down to this 15 here at 21.36, which on the daily would be right around here. We could fill this gap. So on the daily, we could fill this gap to the downside, which is 21.59. And on the weekly chart, that's still bullish. On a larger time frame, that would still be bullish, even if we filled that gap on the daily chart and we kind of bounced on it off of it. Even if we kind of scoop under it a little bit and come to this blue dashed line in this upward ascending channel here, we're still in a bullish momentum for the weekly chart. That's just what it looks like right now. Now, that's a lot of movement, and especially if you're in options, that's going to be very nerve-wracking, but we are still in an upward channel, pretty aggressive one. We start from down here and we go up like this, and like this. Let me go to the top of the body instead of the wick, about right there. We're still in a pretty aggressive upward channel right now, which is falling into the bottom of which, if we were to scoop down, would line up with the center of our other ascending channel at around $21 or so. So long term, we're still bullish. You might still be able to pick up Marathon a little bit cheaper than it currently is, but I don't know if it's going to go much cheaper than that. The line in the sand is this 1973, this previous top. Well, it's 1980. Let's make that 1980. That's our line in the sand. If we go below that, then we're going to probably come to the bottom of this channel around 15 bucks. If we hit the middle of this channel around 21-ish dollars and start curling back up again, then we remain bullish. We are making higher highs, higher lows on the weekly in that relation if it keeps doing that, and we will continue on to new highs. And that will be amazing. So keep that in perspective. When in doubt, zoom out, obviously. We have an indecisive day thus far. It is not looking good, but it doesn't look particularly bad either. So basically, don't panic. We can fill this gap down here to 21.50-ish, still be bullish on a weekly chart, as long as we start curling out of it at some point. We do have the 50 retracement on the RSI has completed now. We are at 45 actually, 46.86 actually. This needs to get back above 50 on the RSI, and I'll start feeling a little bullish about that. One thing that does have me slightly concerned is that the VIX fix down here has not shown me a bottom like it did back here with all these green bars. Haven't seen that quite yet. When I do see that bar, I will start feeling a little more confident about this turnaround. That's what's going on with Marathon. Its relation to MicroStrategy is just something to think about. Now, that's not going to change those dynamics. It's not going to make any of that any different than it is. MicroStrategy still currently is a leveraged play of Bitcoin. It is still vastly outperforming Marathon Digital. It is still diluting its shares at a rate of 30% a year. I mean, Marathon's doing it at a rate of like almost 50% a year, and continuing. But I feel like it's getting punished a little more dramatically, and we'll see. I don't like that increase of 25% on the market cap here in terms of shares that they are currently doing. Not a big fan of that. I wish they would pill a little bit on that, but I mean, I'm sure they probably needed to do that for whatever reason. That's Marathon right now today. It's not bearish yet. It's not bullish either. It's kind of in this nether zone right now, waiting to make a decision. Currently, this daily bar is growing, which is making it lean more and more towards bearish side. But we are getting a red dot here on the 2 hours. We are getting green on the VIX fix. We are at 35 on RSI on the 2-hour chart. This could start curling around and come up to like 22.45, start making a cup and handle down to 23, and then go from there. Kind of like what it did back here on this 2 hour. You saw right here, we started getting green on the VIX fix. It kind of scooped down, went up. We made a handle of sorts, and then it launched from there. We could be doing a similar sort of formation like that. We'll have to see. I am watching this trend line here. That starts at the top at 34 and goes along the tops here at 29. We might come up to this level here at 25-ish and reject off of that trend line right now. We are kind of following that at the moment. That is something I'm keeping an eye on, this descending trend line. I do want to see the price break out and above this trend line, preferably somewhere right now on 2 hour, let's see, around 24.95. Get above that and decisively get above it and stay above it. That would make me feel very bullish and good about any moves coming in on that. But we are sort of leaning in a downward trend at the moment, but not all is lost. That's all I'm trying to say. So it's kind of like stay calm. And for anyone holding the options on this, again, this is not financial advice nor a suggestion to buy, sell, or hold any assets whatsoever, but think about how much time you bought on those options. If it's short term, like if you only bought a month or two, yeah, this is going to be pretty bad. If you bought like a year or further, I wouldn't worry about it nearly as much. Like on CleanSpark, I bought some options on CleanSpark this first day of falling at $17. I bought some Leap options on this. And I bought a year out. So I got over a year. I'm down about 30% on those options I bought that day, which isn't great, doesn't feel good, but I'm not super concerned about it. Let me get rid of that. Not super concerned about it. I've got a whole year. I do think that price will recover in a year, probably will in about 6 months. I bet by July, we'll probably be thinking these highs back here were a good time to buy. Honestly, that's my opinion. Um, Let me get rid of this one too. A lot of these are outdated now. So it's really about time perspective when it comes to those options contracts. If you've got enough time, I'm not super worried about it. Less time obviously creates an earlier expiration date, which is of concern. But options are really all about the time, the amount of time you bought. How much time do you have to wait? What are you able to wait out, or are you not able to wait out when it comes to that? And that will be that'll heavily impact the decisions you make in relation to those instruments, that time, depending on what the price is doing. But with that said, I'm going to close it off here. Please like, comment, and subscribe, and have a profitable day.